Imagine waking up in a world where your salary isn't deposited in dollars, euros, or rupees, but in Bitcoin. A world where banks aren't the gatekeepers of money, and your savings can move across borders in seconds without a single paper note. Sounds like science fiction? It's already here. Welcome back to the Learning Studio, where we explore economics in its most exciting and disruptive forms. Today's topic, part of our modern economic challenges, will explain what cryptocurrencies and blockchain are, how they are changing the financial system, the opportunities and risks they create, and why economists call this a modern economic challenge. The complete economics playlist is linked in the description. What is cryptocurrency? A cryptocurrency is digital money that uses encryption for security and operates without a central authority like a bank. The first and most famous is Bitcoin, launched in 2009 by the mysterious Satoshi Nakamoto. Instead of being printed, cryptocurrencies are mined, created by solving complex mathematical problems using powerful computers. What is blockchain? Blockchain is the technology behind cryptocurrencies. Think of it as a public digital ledger that records every transaction in a secure, transparent, and tamper-proof way. Example: if you send one Bitcoin to a friend, that transaction is recorded on thousands of computers worldwide, making it nearly impossible to fake. Economic opportunities. 1. Financial inclusion, giving banking access to people in countries without traditional banks. 2. Lower transaction costs, sending money internationally without expensive fees. 3. Decentralization, reducing reliance on banks and governments. 4. Smart contracts, self-executing agreements that save time and money. Case study. In El Salvador, Bitcoin was adopted as legal tender in 2021 to boost financial inclusion for the unbanked population. Economic challenges and risks. Price volatility. A coin's value can swing by 20% in a single day. Regulatory uncertainty. Governments are still figuring out how to control and tax cryptocurrencies. Fraud and scams. Lack of oversight creates opportunities for criminal misuse. Energy consumption. Bitcoin mining consumes massive amounts of electricity. Example: in 2021, China banned crypto mining due to its high energy demand and environmental impact. Famous quote: "Bitcoin is a technological tour de force, Bill Gates." Why this matters? Cryptocurrencies and blockchain are reshaping the global economy, from how we store value to how we trade, invest, and even trust institutions. For economists, they represent both an innovation frontier and a regulatory puzzle. Coming up next episode, the economics of artificial intelligence and automation. Subscribe, tap the bell, and check the playlist link below for all episodes. This is the Learning Studio, decoding today's challenges to prepare you for tomorrow's economy.